Assalamualaikum and hello to Doctor and my fellow friends. Today we are from group 2 that we will discuss about the comprehensive case 1, which is we will take the question from the question 8 until question 16. And this is my fellow members, which is myself, Muhammad Ikmal, Ong Kai Tuck, Ong Hui Min, Ahmad Izzat, Muhammad Naufal, and Sharmeeta.
Hey doctor and everyone, my name is Ong Kai Tuck. Today we would like to discuss the answer for the comprehensive case from question number 8 to number 16. And I will cover the question number 8 and number 9. So for the question number 8, determine the net realizable value of the company. So we should use the sale price of inventory for Honda motor, Suzuki motor, Yamaha motor to minus its selling cost. So from the table we can see that the total net realizable value is 3,195,000. Question number 9. Determine the proper balance in allowance to reduce the inventory to net realizable value. So first of all, we should determine the lower cost of net realizable value by comparing the cost of inventory and the net realizable value. And so for the Honda motor, the lower cost of the net realizable value is 1,290,000. Well, for the Suzuki motor, the lower cost of net realizable value is 1,090,000. For Yamaha motor, the lower cost of net realizable value is 750,000. So the total lower cost of net realizable value is 3,130,000. And to calculate or to determine the allowance to reduce inventory to net realizable value, we should use the cost of the inventory to minus the lower cost of net realizable value. So we can get the amount is 320,000. Yes, so thank you.
Good morning, Doctor. Now I'm going to present question 10. For the financial year end 2019, determine the amount of the gain or loss that will be recorded due to the change in allowance to reduce inventory at net realizable value. Prepare the related journal entry. So now we are going to count the gain or the loss due to the change in allowance to reduce inventory at net realizable value. So now we take the balance prior to adjustment, that is 250,000, and minus required balance, that is 320,000. So we get the loss to be recorded in the allowance to reduce inventory to net realizable value, that is 70,000. So now we are going to record the journal entry. So now we debit loss due to decline of inventory to net realizable value 70,000 and credit allowance to reduce inventory to net realizable value 70,000. So it is the answer of question 10. Thank you.
Assalamualaikum and hello to Doctor and my fellow friends. I am Muhammad Ikmal bin Hussin. The number metric is 280131 that we will discuss about the question 11 and the question 13. So we will start the question 11A. So the question is, assume that you are the head of an accounting department. Explain to Miss Fiza what is the net realizable value. So the net realizable value, or in the short form we call as NRV, is the value of an asset that can be realized upon the sale of the asset, less a reasonable estimate of the cost associated with the eventual sale or disposal of the asset. So the NRV is the common method used to evaluate an asset value for inventory accounting. So to more understand about this NRV, this is the example of the NRV formula. So for the question 11P, explain the rationale for the use of the LCNRV rules it is applies to inventory. So we will have two answers for this question. The first is the use of a LCNRV rules is based on both the matching principle and the concept of the conservatism. The matching principle applies because the application of the LCNRV rules allows for the recognition of the decline in the utility of inventory or loss in the period in which the decline takes place. And the second is the departure from the cost principle from the inventory valuation is permitted on the basis of the conservatism. The general rule is that the historical cost principle is abandoned when the future utility of an asset is no longer as great as it is the original cost. So for the question 13 is, identify subsequent measurement model adopted by the Terror Berhad to account for the pattern. Justify your answer. So the answer for this question is the subsequent measurement model adopted by the Terror Berhad to account for the pattern is revaluation model. This is because for this company want to revaluate fixed asset with a sufficient regular interval to make sure the carrying amount does not differ materially from fair value in any period. So we can see from the 61 question by this company for 31 December 2018, they were recorded for the revalued amount which is RM 6.5 million. And meanwhile for the 2019, this company want to revalue amount once again, but in which for RM 4 million only. Hence, the patent are on the active market in the Terror Berhad, and the revaluation model is used in this situation. Thank you.
Assalamualaikum and have a good day everyone. So today I will present the question of 14, which is prepare journal entries necessary to record the necessary journal entries related to the patent in year 2018 and 2019. Okay, so in 2018, December 31st, we debit the amortization expense, which is the cost is 8 million, we divided by the future estimated benefits, 8 years, and we will get 1 million. And then we credit the accumulated amortization 1 million. Next, 2018 December 31st, we debit the accumulated amortization 1 million, we multiply by 3, which is from 2016, 2017 and 2019. 2016, 2017 and 2018. And we will get the 3 million for the debit, and then we credit the patent, which is we take the cost 8 million, we minus with the revalued amount 6,500,000, and then we will get the credit is 1,500,000, and also we credit the unrealized gain on revaluation, which is we minus 6,500,000 minus with the 8 million minus by 3, and we will credit 1,500,000. Okay, in 2019, December 31st, we debit the amortization expense, which is we take the revalued amount, we divided with the remaining estimated future benefits, 5 years, and we will get debit 1,300,000, and we credit the accumulated amortization 1,300,000. Next, 2019, December 31st, we debit the accumulated other comprehensive income, which is 300,000, and we will credit the retained earning, which is we minus 1,300,000 with 1 million, and we will get credit 300,000. The last one is 2019 December 31st, we debit the accumulated amortization 1,300,000, and also unrealized gain on revaluation 1,200,000. And then we credit the patent 6 million. We credit the patent 2,500,000, which is we get from the minus of 6,500,000 minus with the 4 million. So that's all for me. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is Ahmad Izzat bin Muhammad Rozmizi. My metric number is 280304. So today I would like to discuss about comprehensive case 1. So the question that I want to discuss is question 15. Prepare journal entries necessary to record the cost of the customer list and amortization expense in 2017 and 2018. Okay, for 2017, April 1, we debit customer list 680,000 and we credit cash 680,000. Also in 2017, December 31st, we debit amortization expense. The calculation is RM680,000 multiplied with 40% multiplied with 9 over 12, and the answer we get is 204,000. And we credit accumulated amortization with the same amount is 204,000. And for 2018, December 31st, we debit amortization expense, and the calculation is RM680,000 minus RM204,000 divide 3, and the answer we got is 158,667, and we credit accumulated amortization 158,667. That's all for question 15. Thank you.
Hi, my name is Sharmeeta Mariappan, matrix number 280127. I am going to present question 16. Prepare journal entries necessary for the brand in 2018 and 2019. Discuss whether Terhar Berhad should record the amortization expense in 2018 and 2019. On 1st June, the company acquired a legal title to leading motor brand, so we should record debit brand, credit cash amounting 500,000. Second journal is amortization expense. At the end of accounting period, we should record amortization expense. So, debit amortization expense, credit accumulated amortization amounting 58,333. How we get the amortization expense? 500,000 divided by 5 years useful life multiplied by 7 months. Third journal to record amortization expense also, but for year 2019. As usual, debit amortization expense, credit amortization, accumulated amortization, 500,000 divided by 5 years, so we get 100,000. Discuss whether Terhar Berhad should record the amortization expense in 2018 and 2019. The company intend to renew legal life continuously, so the company should not record the amortization. Recognized intangible asset deemed to have indefinite useful life are not to be amortized. Amortization will, however, begin when it is determined that the useful life is no longer indefinite. The method of amortization will follow the same rules as intangible asset with finite useful life. Thank you.
And that is all from us. Thank you for doctor and friends because to put your attention into this comprehensive case 1 as our assessment. Thank you.